Welcome one and all to the weird and wacky world of the stock market. Let us introduce you to stocks, also known as shares or equities, one of the three main asset classes along with bonds and cash equivalents. So, what is a stock? A company will issue stocks to the general public through an initial public offering, first in the primary market. After that, the stocks will be traded on the secondary market. The owners of a company will split the company up into many little pieces and place a value on each piece. They will then make those pieces, now known as shares or stocks, available to anybody who wants to buy them. Once you own stock of a company, then you become a shareholder, and you effectively own a part of that company. In theory, you own a piece of all the company's assets. However, this doesn't mean that you can go into the company and take one of their shares. You have a claim on the company's earnings, but it doesn't mean that you can go into the bank account and take out cash whenever you want. You do have voting rights about the company, but this is usually restricted to electing the board of directors at the annual general meeting. Owning shares is usually represented by a stock certificate, although for ease for sale, this is usually kept by your stockbroker electronically, so you only own shares in street name. You buy stocks or shares in the hope that they will increase in worth and you can sell them at a higher price in the future. Or they can be paid out as dividends, usually on a yearly or semi-annually basis. The worth of any stock will go up or down depending on how the company is doing, what the future projections are, and what people's expectations are. There are two different types of stock: common and preferred. Common stock yields variable returns depending on how the company is performing, while preferred stock guarantees a fixed dividend forever. And the company also has the right to buy back the shares at a premium. Companies also sometimes have different classes of stock which the company prioritizes to be held by certain people who maybe get 10 votes per share. Stocks offer the best opportunity for profit when the economy is doing well, offer the best returns, are the easiest to follow on a day-to-day basis on the stock exchange, and have limited liability if the company goes bankrupt, thus you are not personally responsible. However, they also represent the biggest risk. A conservative portfolio will have 10 to 25% invested in stocks. A risk-taker's investment portfolio will have as much as 90%. Stocks are bought and sold on the stock exchange, which is basically a large marketplace, although you don't actually have to go at it yourself, since the broker will do all the buying and selling for you electronically. There are several physical stock exchanges around the world, like Nasdaq, New York Stock Exchange, Japan Stock Exchange, Hong Kong Stock Exchange, all representing different companies or markets or geographical areas. There are many others, but the top 16 account for over 80% of global market capitalization. There are also various electronic stock exchanges which do not have an actual building. Making trades in stocks on the stock exchange can be a complicated process, especially for the novice investor, so it's best to go through your professional broker.